Citigroup makes small cuts in mortgage workforce as housing market cools. Now, you guys know that this is basically the first sign whenever you have a downturn in the housing market, that mortgage brokers basically are the first to get cut, right? Because basically, nobody's, refinancing, nobody's buying new homes, and they just don't need that type of staff. When you start calling people, the leads are not there, and for companies, they basically lay them off and they hire them back when the market gets hot again. Now, less than 100 positions were affected. It's not crazy, right? But look, if you scroll down here, you could see that JP Morgan Chase laid off 1,000 employees not too long ago, okay, in June, right? So we are seeing this happening basically across mortgage industries, mortgage companies across the United States. They are laying them off. There's no movement, there's no activity. Now, keep in mind, something to know about the mortgage industry is that these are people that make an insane amount of money when the market is hot. Okay, when I say insane, okay, yes, they work really, really hard. Okay, they're on the phone all day long. They're making sales, making sure those loans get sold, moved, whatever. Okay, but basically they're hustling. They're out there. They're on the floor. But man, the kind of money that they make as a result is insane. You guys, I mean, if you know, you know. Okay, so if anybody wants to know what kind of money they make, but you know what, depending on where you live and what kind of loans you're selling, but in a market like in California, it is very normal for a mortgage broker during a hot market to make at least $500,000 a year, okay? And his assistants definitely making over $100,000. But yeah, no college degree, you just got to be a good salesman and you got to kick ass. But here's the deal, you make $500,000, again, that's at the height, right? At the height when everything is the hottest, yeah, you're making a ton of money. The reason you make that kind of money is because you make a percentage on the loan. And when you are in a hot market like in California and in New York, in those types of places where the houses sell for a lot more, you get your percentage is basically bigger. And the more houses that you could, sell, the more you make, right? But again, it's a very stressful job, but yeah, it's awesome. Now, here's the deal. When you have a downturn in the housing market, what happens? Nobody's buying loans. So you go from making, at the peak $500,000 a year to basically making $25,000 a year. So, when it's good, it's amazing, right? It's totally amazing. But when it's bad, you gotta wait. It could take years. It could take 2-3 years before you start making that type of money again. That's the nature of the beast, right? We're seeing that now. So right now, as you guys know, the Feds raised the rates. I think they're going above 6, and that's gonna further kill the market, right? The market's already suffering. The market already hit the brakes. Now we're looking at a situation where, they're basically hitting the brakes even harder. The inflation report's coming out soon. Okay, so I think it was 8.5 was last report. Let me tell you guys, my overall feeling on this is that if it stays around 8.5, it's bad news. If it goes above 9 again, like to 9.1 where it was at the height, it's incredibly bad news. If it goes down into the 7s, it's great, but at the same time, going down into the 7s means raising the rates are working. So the Feds most likely will continue to raise those rates. And then the next big report after that will be the GDP report. Is the GDP shrinking? Is their GDP growing? Now we know that things are not looking good around the rest of the world, right? And that's definitely going to impact us. Here's the problem. When the dollar is strong, it's great for us to buy things from other people, other countries, but it's expensive for other countries to come and buy things from us, right? So just keep that in mind. But in general, guys, this is, these signs when, banks start laying off part of their mortgage workforce. These are signs that that basically it's they're cool. The market is very cool right now. I think it's worse than that. Honestly, I think it's a lot worse than that. Nobody really knows what the hell is going on, but I expect to see more layoffs in the months to come. And yeah, let's see what happens now with these new rates. I predict it's going to be hard on the market, and we're probably going to start seeing some big price drops. But hey, that's what happens during a bubble, guys. When you're in a bubble, the bubble has to pop because it's unsustainable. So I'm going to go ahead and finish this video, and I just want to say a big thank you to everybody who's been watching my videos and supporting my channel. Thank you guys so much. If you guys are leaving comments, if you guys are liking my videos, it's awesome. Thank you. And if you're new to my channel and you like what I have to say, you like my videos, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.